Berkshire Hathaway is one of the biggest insurers in the world. One of the advantages of that is the way that insurance businesses work. You get paid the premium, and then there's a gap between having to pay those premiums out.
Yeah.
So you're sitting on effectively a large pool of cash. That cash, he then goes and invests.
Yes, but buys private businesses, invests in the stock market while maintaining enough cash to pay out on any claims.
Yeah.
That's the superpower behind Berkshire. That's what gave Buffett the money he needed to invest so successfully.
Yeah.
And, every insurance company has a float. Every insurance company invests. None of them really do it as effectively as Buffett. A lot of them just buy a lot of, fixed income and more safe securities. But there are two companies, one in Canada, one in America, that are trying to really replicate the Buffett insurance float strategy. So we wanted to run an eye over two of these companies. The first one is Markel Group, New York Stock Exchange ticker MKL. And the second is Fairfax Financial Holdings. They're based in Canada. The ticker is FFH. And we should say, we're familiar with Markel.
We are familiar with Markel. So we went to the Berkshire Hathaway annual conference in 2023 in Omaha, Nebraska. Awesome experience.
Which is good because you're the Omaha of Darlinghurst.
I'm the Omaha of Darlinghurst.
Which would make no sense if people are watching this segment in isolation.
True. The Berkshire AGM is on the Saturday, and then Sunday morning, Markel come in and do their own sort of AGM with a breakfast after a 5-kilometer fun run.
Yeah,
what was it before?
Berkshire do the 5K fun run, and then Markel have they put a brunch on, and then they do their AGM, really trying to align themselves with Berkshire shareholders. We went. It was not as interesting as the Berkshire one. But it wasn't bad.
Yeah, good event.
So I had a look at how Markel's gone since we saw their AGM in May 2023 when we were in Omaha. Up 39%.
Okay.
Not bad.
Solid. If we look at Berkshire, though, same period, May 2023 to now, it's up 75%.
Okay.
So
I did say trying to replicate this. So I wanted to have a look a bit more at Markel and Fairfax and just sort of understand what's going on, given that Buffett is front of mind, given that he's retiring at the end of the year. So let's start with Markel, a little bit about the company. They've been around since the 1930s as an insurance company, but they really started this Berkshire Light strategy in the late 2000s. So they've been doing it for 20 years, call it. They have 3 business segments: insurance, investment, and their operating businesses, which is called ventures.
Okay.
Sound familiar?
Yeah.
So insurance, it's quite different to Berkshire. They're focused on really specialty lines like professional liability insurance, whereas Berkshire is much more mainstream with property and casualty. And then they have they're the massive reinsurance business where they offer insurance to insurance companies on their insurance policies. So that's insurance. Then there's ventures. Much like Berkshire, they're focused on buying boring, profitable businesses.
Nice.
Here's some examples.
Yeah.
2008, they bought Parkland Ventures, which make manufactured homes.
Okay.
2009, they bought Panel Specialist, which makes dorm room furniture.
Really?
Yeah.
What's the difference between
just cheap,
really small
cheap stuff, I reckon. Yeah. 2009, they also bought Ellicott Dredgers, which makes dredging equipment. 2011, they bought Weldship, which makes specialty gas transportation and storage equipment. 2012, they bought Havco, which makes laminated wood flooring for dry van trailers, trucks, and containers.
Yeah.
So, just like
meat and potatoes.
Meat and potatoes businesses. Things that keep the economy moving, but just aren't considered sexy.
Yeah.
So that's their ventures, very similar to Berkshire.
And do you have any information on whether or not these have been successful, or these are just these are businesses they still haven't?
I'll get to that. So then the third business segment is investment. So over the past 5 years, they've grown that from 7.6 billion to 11.8 billion. Not bad. Do you want to have a guess at what their biggest holding is?
In Berkshire.
In stocks, yeah. Berkshire.
Is it?
Yeah. 13% of their investment portfolio is in Berkshire. And then their other top holdings: Alphabet, Brookfield, Amazon, Deere, Home Depot, Visa, Apple.
Nice.
Big
Yeah.
American companies. Well,
Solid.
Brookfield, Canadian, but yeah, the big boys. So growth between 2016 and 2024, their earnings are the compound annual growth rate of their earnings in the insurance business 9%, in the ventures business, so the companies they own wholly, 15%, and then their investment income has grown at 12% a year. So solid.
Pretty decent,
Like, yeah, obviously not Berkshire numbers.
But like if you do that if you do that year on year on year, you're compounding pretty well.
That's compounding.
Yeah.
Now, one thing, as I was doing some research on them, they actually have an activist investor on their board, in their cap table, that's trying to split the company up.
Okay.
Which is the anti-Berkshire
Why?
thesis. They think that the operating businesses would have more value, like they would fetch a higher multiple as a standalone business. Because if you look at their valuation, Markel's valuation trades on a 14 times price to earnings, but it has grown revenue at 15% a year over the past 10 years.
Okay.
So it's like it's pretty cheap multiple, growing at a decent clip. Obviously not growing as fast as Berkshire, but I find it interesting.
And so Berkshire is trading on a 13 times PE. What was that one? 14.
14.
So pretty similar.
So let's go north of the border and let's look at the second one, Fairfax Financials.
Nice.
Founded in 1951, story starts in 1984 when Prem Watsa buys the company. It was a trucking insurance company, which he bought. He renamed it Fairfax Financial Holdings. Fairfax is short for Fair Friendly Acquisitions.
The softest player in the market.
So he buys an insurance company. He renames it to be about acquisitions. You can see the playbook.
Yeah. Fair and friendly ones, though.
And honestly, they run the Berkshire playbook. So their insurance business is property and casualty and reinsurance, same as Berkshire. And then their investment side is both market investments and acquisitions. The big difference, as I was looking at them, a lot more global than Markel. So the list of Markel investments were basically all American. The list of top holdings in Fairfax's portfolio, all global. So here's the list: Eurobank, which is Greek; Gulf Insurance, which is from Saudi Arabia; Thomas Cook, which is India; Fairfax India, which is India; and Quest Corp, which is India. Here's the thing: they've grown at 18% per year since 1985.
Wow!
So that's getting close to Berkshire's 20% a year.
That is, yeah.
And here's the other thing: they're currently trading on a 9 times price to earnings ratio.
Okay.
Yeah.
Now it's getting interesting.
Yeah. So I just put them head to head to close this episode out. Starting with their price to earnings ratio, Markel 14, Fairfax 9. Share price growth the past 5 years, 119% for Markel, which is about 17% a year.
Yeah.
532% for Fairfax,
And
47% a year.
That's strong. And to contextualize, Berkshire past 5 years is 203.
Okay.
Yeah, so bang in the middle.
Revenue growth the past 5 years, Markel 14% a year, Fairfax only 11% a year, but book value, so the value of their assets, which includes all their investments, Markel has grown at 9% a year, Fairfax has grown at 21%
Fairfax
a year.
seems like a pretty good deal.
Yeah, and here's one of my big investing gripes here in Australia.
Go Berkshire. Oh, you can't buy it.
Most brokers
Canadian.
don't offer Canadian shares.
Come on, guys. Come on.
Come
pick it
on,
up.
guys.
All right, then to close it, shoot, shag, marry, Berkshire, Markel, Fairfax.
Okay, and you're saying that this is Berkshire with like a post Buffett Berkshire,
as it is today, like knowing what's going to come.
Well, I mean, you can't marry. You don't marry Berkshire knowing that Buffett's about to leave.
Well,
I guess that's shag.
You know.
Like, I'll give Buffett one last throw. One last time with Warren Buffett, and then I guess Fairfax has grown faster, so I guess Fairfax I'm marrying, and then Markel I'm shooting.
Sorry.
Although, the one thing I think, the one key thing about Buffett's playbook has been a belief in American capitalism, which Markel definitely reflects more than Fairfax. But I guess like over to you. You asked the question. Now you got to answer it.
So, Fairfax seems pretty compelling. It just what I've been thinking about through this whole segment is that you know, that theory that we often talk about with experts around just taking the best, and like there's three here who are all trying to do the same thing. Historically, Berkshire's been the one. Like, there's a reason these two are trying to copy it.
Yeah.
Can that sustain? I'd be shooting Markel. I'd be shagging Fairfax and marrying Berkshire.
Right.
Yeah.
Well, there you go. I don't think we're going to be making that question a regular segment, but stay tuned.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.